Guys, today we have to talk about something that was just sent to me from one of my hedge fund and family office friends in regards to Bitcoin, because Bitcoin will most likely revisit $30,000 and beyond before we see any nuance of Bitcoin getting even close to $20,000. And this kind of insider info is something that I want to share with you today so that you can prepare for that move and understand how institutions, asset managers, and hedge funds are playing in this market. And if you think that's interesting, then definitely stick around here. Make sure that you are subscribed definitely to this channel, liking this video, and also activating the bell so that you will never miss out to get these top tier infos. And now let's directly jump into that. So first of all, I want to talk about here still the potential bear flag that we are forming here. Based on the info that I just received today, I don't believe that this bear flag will really be playing out. Of course, it can break to the downside, but I think it's going to be stopped around $25,200 and would not break lower than that. Remember, guys, I told you yesterday the technical target would be way lower than that, around like $23,000, $22,000 something. But based on what I received, I don't believe that this will be the case anymore. So rather that we just see a fake out from that bear flag and then see a straight move back up into 27, 29, 30,000 and beyond. And please stay here with me. I'm gonna explain you in a second why this info made me so bullish that I received. So first of all, I received here this chart or this spreadsheet, whatever you want to call it. And right now, you have to understand, asset managers that are managing hedge funds, family offices, institutional money, they are all out of their shorts. 0 shorts are open. All of them went long. Why did they went long? What are we missing that they actually know? And I believe it has also something to do with the 120,000 Bitcoin that were bought over the last 3 months from Gemini. They were not accumulating during these 3 months to just see now Bitcoin going to like $20,000, $15,000 and miss an opportunity to buy at these prices. Even though they have, of course, a long-term horizon, if they would know there's a big further crash coming, they would have waited to accumulate in these levels. But now, asset managers went heavily long on Bitcoin. So, and you have to understand here a little bit the market psychology. Retail people screaming right now for $15,000, $12,000, $10,000, even $8,000 I have seen. But institutional players, they are quiet. They are quiet. And every time when they get quiet, and especially if the retail is then basically screaming for one direction, it usually goes the other way. And that is exactly the reason why you have to pay here so close attention. So I'm gonna show you now further proof what's happening when asset managers stop being short and starting to go long. So, and for this, I have to switch to this chart here. So here, I will jump back and forth between this here and the Bitcoin chart. Look here, first that you understand, here asset managers shorts, when they were basically bottoming out, the price always moved up. So we had this here in 2019 from April to like June where we bottomed out. And then we had this again from like September 2020 to January 2021. And now we are again bottoming out. So now let me show you on a Bitcoin chart what's happening every time there. So when we're going here to the Bitcoin chart, see here in 2019, that is the same time span where the shorts were bottoming out and not coming up again. And then Bitcoin saw a massive rally to the upside. So here in that specific rally, it was a 170% rally in a matter of 12 weeks. So because here I'm on the 3-weekly chart. Then the next time, like I said here from like September Actually, I have to make this smaller. From September 2020 to January 2021, we went up 440% and created our all-time high that we have right now. And now again, shorts are bottoming out. Asset managers, institutional players are not in shorts anymore. They are long. What do you think is going to happen? Of course, we can come down to the bottom of that box. So of course, we can come down to like $25,000, where we were here actually already, and confirmed this as a potential support floor in that box. So yes, we can come down one more time to 25 before we then go up and break out of it. But yeah, that's basically the worst case scenario that I see, based on historical data and everything what I was told from these insiders today. I really believe that history will repeat itself as it has done here already over and over again. And I don't think that this time will be any different. And if you want to play this with me together, then don't forget, on BYBIT, you should definitely trade on BYBIT. It's still, for me, the best exchange out there. Just sign up here with that specific link here. We can still fight together for the $8 million prize pool that we can share. And of course, if you just want to copy trade me and get your initial $30,000 deposit bonus, then also just use this link below here and claim your bonus. So now, how am I going to play this? For this, I have to move to... So first of all, what they also told me is the liquidity range in which are market makers playing right now is the exact box that I had drawn out here, from 25,300 all the way up to like 26,300, that kind of range. And above us, they are completely neglecting here the $28,000 level. They're not looking at that at all. They are looking here at that range. That is the other big liquidity zone. So here, that is the other zone that they are playing in. So like I said, can it be happening that we get one time lower to trap some more shorts before they send it up again? Yes, definitely. This can happen. So it's actually most likely going to happen to make people believe, oh shit, look, this bear flag, it's breaking down. We will break under $20,000. Oh my God. That's most likely what's going to happen. And then they turn it around just on the bottom here. Just there. They're going to turn it around and send it straight up. And then they get all the liquidity that was trapped down here from the shorts and send it up for the longs. Then they trap again all the way up here all the longs that flip super bullish at 31K and start to long with crazy leverage. And most likely they're going to send it down again before they send it then finally to the upside. So that is one of the scenarios that they explained to me what's most likely going to happen. They told me they're not sending it from where it is right now. So they did not say to me they're going to put it lower. They did not say they move it a little bit higher and then send it. Then they said basically between the lines, without saying it, that they send it a little bit lower within that range here, and then they're gonna send it to the upside. But also here they did not say pit stops along the way. They only told me end goal is to go back to 30K. So, and that is the big takeaway from today's episode, guys. We only have to watch these two ranges right now because that is where the big guys on the table are playing. And you don't want to be trapped in their game. So that's why you want to wait either that we break above $26,300 to open a long, or close or under the bottom of that box at 25,300. That is kind of the range where you otherwise want to open a long. You don't want to open a long here in between somewhere and get chopped up. That's what you don't want to do. And you also definitely don't want to open any shorts right now with having that kind of knowledge what's actually happening. So, and then let me go back here. So here you actually also see something really beautiful. We had here this symmetrical triangle and they faked out to the downside and then just started to chop sideways, you know, so that makes also no sense. I can of course adjust the lines here a little bit, and then you see we kind of got what I was talking about. But again, we are starting to break here the symmetrical triangle to the downside. I told you guys I expect a fake out. We got the fake out. We went back up, but now if this kind of closes as it is here to the downside, then most likely we finally break it to the downside. That would be only changing, in my opinion, if we would see a 1 hourly candle not trespassing that line here at $25,600. So then we would just create a a higher low, and then see something like this most likely. But if we break that line, then we go first a little bit lower, as I just mentioned, and then we continue to go to the upside. So where was the other chart? So here also, don't forget, here is also liquidity trapped. I had shown you guys this yesterday, so it makes a lot of sense to bring it down to like 25,800, 25,600. We just broke one of the support levels where we had also some liquidity at $26,000 approximately. So, but at some point they're gonna reverse all of that and go for every single bit of liquidity already here. And then, of course, way above us, there's also still a lot of liquidity that is of interest to be grabbed. Guys, that's it already for today's episode. I hope you enjoyed it. Please make sure that you smash the like button, hit the subscribe button, hit the notification bell, and I'll see you then for sure